Guys, this is how I missed making $150 on Friday. Trading USD chef. Yeah.
So the pair is USDCHF. This is a pair that I really like and I love because it's simple. It's always simple. And my trading model inakwanga rahisi. This is the Asian high right there. This is the Asian low. This is the Asian low. You might ask why? Why am I even starting with it? It's cause Asian high and low are full with liquidity. So when the liquidity is swept, you get good movements. An example is like this: Asian high was taken. Look at this melt, a very nice melt, which I missed. And why did I miss this trade? It's cause over here there's a change of character. Over here, there's a change of character, meaning that the market sentiment has changed from bullish to bearish. Okay. Now, what I was waiting for was this. This is a bullish market. It was like this previously, like for the last 2 days. Then a change of character happened. This high broke below this low. It can break below E low up away. Now what I was waiting for over here, over this place, is a retracement around the 50% of this impulsive move to the downwards side. I was waiting for the 50% retracement, pullback, then in the line sell. Now it happened that this is a change of character over here. It happened that there was no pullback. So hence I missed this trade because I was in for a pullback over there. This is a Fibonacci tool from the swing high to the swing low. This is a swing low over here, the Asian low. I was waiting for the trade now to pull back. Waiting for the trade to pull back up here with this resistance zone. These are resistance. Whenever price is down, moves. Whenever price is below the resistance zone, goes down. Whenever it's above, goes up. So I was waiting for a retest because this is a break. A retest. I was waiting for it to retest the 50% zone and the resistance zone to sell. So when I saw this movement over here, when I saw this candlestick close like this, I thought it was manipulation. For me, this was a manipulation. Manipulating early sellers to get in the trade. This here I marked it as my liquidity. This is on Friday morning. This is around 11:45. This is now prime London session. I marked this as liquidity, waiting for it to be swept. I was really waiting it to be swept, uh, making these early sellers to be trapped and be moved, be stopped out of the trade. But now it went on breaking and closing below the EMA over here. That's actually my setup. Closing below the EMA, look at that. A very sweet candlestick. Closing below the EMA. The next one is where I take the trade over here. And why am I saying 150? It's 150 because I risk $50 to make three times that's $150. This was a very nice trade, but I missed it. I missed this trade on Friday, right there. I could have been up 3% on this trade, but it's okay. It's okay. Now, so that's how I missed 150. It was not something bad. It was something actually that I had back tested and I've seen. What have I seen? This is what I've seen. Most of the time, if the market has an impulse like this, it fails to pull back. It usually fails to pull back to 50%. Uh, the reason being is because it has already shown its momentum. I'm looking for another example. I have a couple of examples. Mind you, in the 15 minutes time frame. Look at this. My chart is so dirty. Look at this impulsive move right here. This is an impulsive move to the downside, and it failed. But this came near. It was near the 50% range. It was near, but it didn't pull back all through the 50%. I have another example. This is another example over here. Let me get this out. This is an impulse from the swing high to the swing low. Never came even close to the 50%. Continued going to the downside. Another example over here. An impulsive move to the downside failed to pull back to the 50% range. Meaning, if it happens again in the future, which I know it will happen, I won't be fool again to wait for the 50% pullback. No, just going to take the trade, and that is how this is a trade that made me miss the $150 on Friday. So yeah, catch you on my next video. See ya.